Okay, welcome back and good afternoon. Welcome to our options education webinar series. Um, my name is Tony Zhang. I'm the chief strategist here at Options Play. And today we're going to be talking about how to find your directional edge and leverage those into explosive options trades. So the reason we're here to talk about this topic is because in order to trade options with any amount of certainty, you must have a clear directional view on the underlying stock. So the question becomes, how do you get a reliable reading for stocks or ETFs that you want to trade? So what we really want to show you is a set of tools that are available to you here at Options Play that give you a view into a stock's trend and direction. And the goal here is to really help you cut through the noise from the hundreds of different ideas that are thrown at you every single day so that you can have a set of tools that you can take those ideas and filter them through to get a reliable reading, and at the same time provide you with a framework that you can find some directional edge in all the different stocks, ETFs, and ideas that you're going to search through every single day. So we really want to help you find the highest probability setups for bullish and bearish views. And reality, what I really want to hope, what I really want to teach you guys here today is a set of tools that are available to you here at Options Play that's going to help give you a clear sense of trend and relative strength that's going to help you cut through all of this noise. And then once you have that directional view on the underlying stock or ETF, that view in itself isn't enough to give you profits, meaning you still have to trade a strategy in order to profit from that. So that's really where we're going to jump into the second half of our webinar and actually show you option strategies that make sense when you have a directional view on an underlying stock so that you can take that directional view, but more importantly, do it with limited risk. A very key component to being able to profit in the long run is managing your risk. So by trading option strategies like the one we're going to show you here today, you're going to be able to leverage these directional views with limited risk and potentially higher return. So my name is Tony Zhang. I'm the chief strategist here at Options Play, for those of you that don't know who I am. If you've seen one of our webinars or participated in one of our webinars before, welcome back. And for those of you that are new to Options Play, I really hope that this kind of inspires you to consider taking a look at our platform to show you how easy it is to gain that directional view using the trend and relative strength indicators on our platform. And then more importantly, how you can leverage those into actually profitable trades. Now, this webinar is really for both beginners and experienced options traders. This webinar is recorded, and the slides that I'll be presenting here today, I'll send out both the recording and the slides right after we finish, so that for those of you that are brand new, you can take a look at the recording and play it back. So before I get started on the actual slides, I just want to make sure that everyone knows that there's a few things that I want to point everyone to. When you receive the slides, we have a few different important links. So for those of you that are brand new, we do have previously recorded webinars. I may reference a few things during our webinar today. So if you're interested in seeing some of those previously recorded webinars, links will be included here for you. We have daily trading ideas that are sent to your inbox every morning. You can subscribe to it by clicking on some of these buttons here. And then lastly, for those of you that are brand new to options trading, there's a resource called the Options Industry Council. Great free resource that's available to everyone, optionseducation.org, that allows you to better understand all different types of option strategies, option terminology. So if some of the things that we talk about here today are foreign to you, please make sure you go to the Options Industry Council, sign up for their website. It's free of charge. It's a great resource for those of you that are starting out with options education. And follow us on YouTube, because you're going to be able to get all of these webinar recordings automatically in your inbox once we're finished with all of these recordings. So today we're going to go over a few different things. Number one, I want to talk about this problem that we're having in our lives, not just in trading, but pretty much all other places where we kind of suffer from paralysis by analysis. Because there's so many data sources available to us, it's difficult to cut through that noise. So I want to talk a little bit about that. Then I'm going to introduce two indicators that's going to help you cut through some of this noise. That's where trend and relative strength come in. So I'm going to describe what trend is, what relative strength is, how you measure them things, how you measure both, and then more importantly, provide a framework between these two indicators alone to give you a sense for finding a directional edge using trend and relative strength. Then what we'll do is we'll go through some bullish and bearish examples. So taking that framework, I want to show you guys some real examples of some stocks in the market right now that are exhibiting bullish or bearish trends, even some ones that are reversing bullish and bearish trends, to give you a real full sense of the different types of trends that you might be discovering from these two indicators alone. And then lastly, what I want to spend most of my time on is doing some live analysis with Options Play. This is the tool that you guys have signed up for. This is the tool this is why you guys are all here. So I want to actually show you all of the things that you learn in practice on Options Play, so that after this webinar, you actually have the tools to be able to go out and plug in your own symbols and get a sense for the directional view, and then quickly leverage that into an option trade so that you can take that directional view with limited risk. So before I get started, I just want to do a quick poll here for those of you that are here in the room. What do you currently use to find your directional view? Do you use technical analysis, fundamental analysis, or do you use other forms of analysis? Just so I get a feel for, you know, the audience here in the room. Okay, so far it's a pretty overwhelming majority for technical analysis. 7% of you use fundamental analysis, 9% of you use other. Okay, great. So that really helps answer my question. So it sounds like the vast majority of you are familiar with technical analysis. That's what we're going to talk about here today. For those of you that use fundamental analysis, there's absolutely nothing wrong with fundamental analysis. But what I will point out is that fundamental analysis only provides you with a directional view on the underlying stock itself. It doesn't really help you understand what's currently going on with the whole market, what's going on with the sector. These are things that are important when you're trying to decide where to focus your attention onto. So that's really where the power of technical analysis is really important, because you can apply the techniques and technical analysis that you do for the underlying stock to its individual sector, to the overall market, and even other markets that are correlated to the asset that you're trading. So if you like to trade utility stocks, really important for you to pay attention to interest rates. So these are all different types of things that are connected that, you know, if you're a fundamental analyst, sometimes it's difficult to look at what's currently going on in the fixed income markets or the bond markets if your background is in fundamental analysis. So this is really why we want to create a framework for technical analysis. Even if you use fundamental analysis or other forms of analysis, we want to make sure that you understand how to utilize the tools here to give you a better view of not just what you're trading, but the overall picture of the whole market. So that's what we're going to go through here today. So number one, this information and data overload that we currently have with trading is probably one of the biggest contributing factors to people not having a tough time understanding where the direction of a market is headed. You know, I certainly used to trade with 5 different monitors on my desktop because I used to want to try to keep track of everything. And then I finally realized that that's not the right way to go. I needed to simplify my life. I need to simplify the indicators. I need to simplify where I get my data to something that's more reliable, that's more objective, that's something that's consistent. And that's really what we're hoping to provide you with a framework on how to go about achieving those things here using Options Play. So this is really where my philosophy as a market strategist working with traders for the last 13 years, from all different types of backgrounds, all different types of asset classes, technical traders, fundamental traders, statistical traders. What I've realized over the years working with lots of different clients is that the ones that tend to be most successful are the ones that really like to keep things simple. And what we're trying to do here is simplify our lives. We're not trying to make it simple. We're just trying to simplify our lives. And that's the key thing here, because we don't want to ignore things that are important to what we're looking for. So as a technical analyst, what we're mostly concerned about is price action. Now, there's so many different ways to measure price action. So that's why I want to lay out a framework for price action that has been used for a long period of time and has been consistent in being able to give you an idea as far as where the trend and relative strength of a market is. So I'm going to provide 2 indicators that I think you should pay attention to when you're trying to gain a directional edge. Number one, you want to provide some trend analysis. This is very simply trying to predict the future based on past history. This is the belief that history may not repeat itself, but it certainly rhymes, and trends tend to stay intact until they reverse. Now, how do you actually measure trend? There's lots of different ways. Probably one of the most popular and most common ways is moving averages. Users that use moving averages, I think from 10-day to 20-day to 50-day to 200-day, these are all different ways to measure trend over a different period of time. The second most popular way of identifying trend is simply drawing trend lines or channels to basically look at a chart and draw a pattern as to whether the stock is trending higher, lower, or sideways. So these are all valid ways of identifying trend. Now, what we want to provide you in the next slide is a framework for a consistent application of trend analysis. And the reason for this is because moving averages, you can use all different types of moving averages, and you can even use different period moving averages, different calculations of moving averages, even different interpretations of the same moving average. So that's really why we want to provide you with more of a framework rather than just telling you, what works, what doesn't. Relative strength is the second thing that we want to look at. This is what we want to compare the stock, the performance of the stock to the performance of the market. Sorry, there's a typo here on the spreadsheet, but on this slide. But what we're trying to do is compare the performance of the stock to the performance of the market. And the easiest way to do this is simply just take the price of the stock and compare it to a major index like the S&P 500. That's a simple way of measuring relative strength. A more robust way, or a way that's more commonly used by institutional traders, is really ranking a stock based on multiple factors. You can use different momentum indicators, different trend indicators to get a sense for how each stock is performing on short, medium, and long-term categories, and then basically rank each stock based on those individual categories. And what it does is it gives you a sense for stocks that are strongest versus stocks that are weakest. So common ones like this are IBD. For those of you that follow IBD, they publish a relative strength ranking on every single stock. Zacks also produces something similar. Stock Charts has a technical rank that they do. All of these are basically the same methodology with different calculations of trying to measure momentum over different periods of time and then ranking stocks against each other. So you get a sense for what are the strongest stocks in the market and what are the weakest stocks in the market. And the reason for this is really because of market psychology. Stocks that are outperforming tend to continue outperforming because those are the stocks that both institutional and retail money managers tend to purchase, because those are going to help them outperform their benchmarks. And stocks that are underperforming the benchmarks or underperform the market, those are the stocks that people want to get rid of in their portfolios because they're the ones that are contributing to them underperforming their benchmarks. So that's really what drives a lot of institutional money flow. So looking at relative strength gives you an idea as far as what stocks are in favor and what stocks are out of favor, if you will, with the institutional markets. So how do you actually gain a directional edge if you look at trend and relative strength? Now, the key here with relative strength and trend analysis is not necessarily which form of trend analysis you do. I talked about using moving averages as one way. Trend lines and channels are a different way. You can use all different forms of moving averages. And the key here is not necessarily which one you use, but how consistently you use the same one. And I've said this before in other webinars, if you've ever watched some of my technical analysis webinars, but this is really the fundamentals of keeping things or simplifying your life. Because what we do is through automation, by consistently applying the same moving averages and reading them the same way, that's how we're going to help you gain consistency in your directional view. So we use a triple moving average to determine the 1 month and 6 month trend. So what we're doing is we're applying the same moving averages for you every single day and applying a consistent reading of those moving averages so that you get just a simple bullish, bearish, or neutral trend reading for both 1 month and 6 month trend. So that gives you a clear indication of both the short-term and long-term trend of a stock. And what we do is we show you how that trend indicator has changed over time. And what you can do, it's a very visual way to determine trend. As you can see, once they both turn green, the stock starts to rise, measuring that trend has continued to move higher. Versus when the stock is moving sideways, as you can see, the trend is very, very choppy, or the trend quality here is very choppy. And then once it turns green, you get this very consistent, reliable reading on that trend. So this is really how we go about applying a consistent application of trend. And then for relative strength, we have a very simple measure of a technical score. And the technical score ranges from a score of 1 to 10. So we talk about learning or quantifying which stocks are in season and which stocks are out of season. This is how we quantify it for you so that you don't have to go out there, pull up a chart, and compare different charts to see which stock is outperforming which ones. We simply provide you with a quantitative number where 1 are the weakest stocks in the market and 10 are the strongest stocks in the market. So you get a sense from a quantitative perspective, which stocks are strong, which stocks are weak, to give you an idea as far as which stocks are in favor and out of favor with the institutional investors. So this is really the key to helping you simplify your life, cutting out the noise, so that if you have a stock idea or someone gives you an idea, you can plug it into our application and get a sense for what the 1 month and 6 month trend is. So you get a clear sense of direction and understanding as to whether that trend is a week old, a month old, or just started today, using our trend analysis. And then more importantly, looking at relative strength. So you get a sense for how does the market view this stock right now. So this is really the key here, is using these two indicators together in conjunction with each other to gain a directional view. So how do you go about doing that? Now, when we look at trend, the thing about the trend is that it only helps you compare the trend of a stock against its own history. And what that does is it doesn't give you a sense for comparing a stock against another, versus relative strength allows you to compare one stock against another, but it doesn't give you an idea as far as whether that's just starting or ending, or whether it's, whether it's strong for a period of time or a short period of time. You don't get a sense for timing. So that's really why we want to combine the two to gain your true directional edge. So I have a few different examples here, or 4 different examples here. Strong bullish and strong bearish, which are trend following methods, and then bullish turnaround and bearish turnaround, which are more trend reversals. So what I want to do is I want to go through some examples to solidify these 4 different categories so that you can quickly identify them when you use options play, so that whatever stock you type in or whatever watch list you construct, you get a very quick sense for whether a stock falls into one of these 4 categories. And everything about our platform is extremely visual, so that you don't have to remember these things and think about these things and read it. Everything is color coded for you, so you can very quickly decipher from a watch list which stocks are strong, which stocks are weak, which stocks are trending higher, which stocks are trending lower. I'm going to show you a few different examples to help drive this home. So when we talk about strong bullish and strong bearish, these are what we call trend following methods. This is really very simple. This is where the relative strength matches up with the trend. So you have a stock with strong relative strength telling you this is outperforming the overall market and it's exhibiting bullish trends. These are what we consider trend following strong bullish stocks. So if you're looking for bullish opportunities, these are the types of stocks that you typically want to look for. Conversely, strong bearish is just the exact opposite. This is where you have a stock with weak relative strength, so a stock that's underperforming the overall market, and it's exhibiting bearish trends. So these are both trend following methods, very easy to remember. And what I have is a few different examples here. So this is a watch list that I pulled from Options Play. And one of the things that the way we designed this watch list was to provide you with this type of information visually, so that you don't have to pull up a chart. You don't have to do anything. You can just look at the number, which is the score here, which is your technical score. I always sort my watch list based on my technical score. So I know exactly which stocks are the weakest stocks at the top of my list, and the ones that are the strongest stocks at the bottom of my list. And everything is color coded for you for trend. So I know down here that NASDAQ and Microsoft are my strong bullish stocks because they have a high score and they're green arrows, so telling me that the 1 month and 6 month trends are bullish, and they have a high technical score. And the ones at the bottom of my list, or the top of my list, like GE and Facebook, these are the weak stocks, and because they're red, that's telling me that the trends are bearish. So I have very quickly, without having to pull up a chart, without having to do any fundamental analysis or any analysis at all, I already have a quick understanding as to where I should pay my attention to if I'm looking for bullish or bearish stocks. If I'm looking for bullish, I'm going to look at Microsoft and NASDAQ as a starting point. If I'm looking for bearish opportunities, GE and Facebook are probably better places to start. And notice how we can do that within just a few seconds without having to do any further analysis. And that's really the key here of options play. Now let's jump back to the two trend reversal examples. This is where we have a stock that's turning around or turning bullish. So a stock with weak relative strength. So a stock that's actually underperformed the overall market. This is these are stocks that have maybe gotten beaten up recently because of some news or fundamentals or maybe a poor earnings announcement, but it's now exhibiting bullish trends. So it's starting to turn around. So this is classic stock that's bottoming, a stock that was oversold, that was out of favor, that's starting to turn around. So an example of this is perhaps Whirlpool or Charles Schwab. As you can see, they both have scores of 3, so weak relative strength. But notice that the arrow here is green, which is telling me that the short-term trend is bullish. And here for Whirlpool, the 6-month trend is turned neutral. The Charles Schwab, the 6-month trend is still bearish. So this is still in the early stages of potentially a bullish turnaround. So this allows me to quickly look at a watch list without even pulling up a chart and get a sense for which stocks may be starting to bottom. So if I'm bottom fishing, if I'm looking for some opportunities for some cheap stocks, this might be where I want to look. Lastly, we have bearish turnaround. These are stocks that are probably reaching some kind of a top. So if you're long these types of stocks, it might be time to consider taking some profits. So these are stocks with strong relative strength, so stocks that are still outperforming the overall market, but the trends have started to reverse and they're starting to exhibit bearish trends. Whoops, bearish trends. I don't know why I can't get that to work. Bearish trends. So this is how you can tell a stock that's starting to turn around. So an example of this is perhaps CarMax or Qualcomm. Stocks that have strong relative strength. Qualcomm, many of you, if you're paying attention to the news, had some poor earnings the other day. But this was still a strong stock as in the technology sector that's now starting to turn around. So these are stocks that maybe if you own these stocks, time to take profits. If you're a bit more opportunistic and you're looking for some shorts, this might be a place to consider taking a look at that. CarMax, strong stock with red arrows telling me that the trend is turning bearish. Same thing with Kellogg, score of 6, which is fairly neutral, but the trends are bearish. So telling me that this is stock that's starting to turn around. This is how you can scan a big list of stocks without having to go through each individual one, looking at chart by chart and analysis by analysis, and quickly get an understanding as to where you want to start. So that's where I want to show you guys some examples of this using the options play. And then lastly, what I want to do is I want to show you guys how to leverage all of these stocks or these views into an actual trading strategy. So lastly, what I want to just talk about is when you're looking at these types of things, you don't want to just look at the stock itself. So what I just showed you here before is understanding what's going on with the underlying stock, get a quick directional view on the underlying stock. But if you want to find high probability setups, which is what you typically need in order to trade these directional views, you want to not look at just the underlying stock. You want to look at a few other things as well. This is really where we take a top-down approach when it comes to selecting stocks to take a bullish or bearish view on. I certainly use this methodology when I select the daily play for the emails that we send out every single day. What we look at, number one, is the market. We look at, is the market bullish or bearish? We always start there as we get a sense for where we think the market's headed in the short term. We use our trend and relative strength indicators to give us a sense for that. Then what we do is we look at the bullish, we look at sectors. We always start with looking at the market, then we look at the individual sectors before we look at any individual stocks. So when we're looking for bullish ideas, we always try to do this when the markets are bullish or when we have a bullish view on the underlying market. And then what we do is we use the sector indicators to give us an idea as far as which sectors are strongest, which sectors have exhibiting bullish trends. And then what we do is we look within those bullish sectors for strong and bullish stocks. That's how we're able to get as many things lined up in our favor in order to find these high probability bullish setups. And for bearish trades, it's just the exact opposite. We try to do it when we have a bearish outlook on the market. Then we look at weak and bearish sectors. So we look at our sector watch list and see, what sectors are weak, which sectors are trending lower. And then within those weak sectors, that's when we try to find a weak or bearish stock. And that's how we're able to get a high probability bearish trades for some of the trades that we make during our daily play. So this is the type of top-down approach that you typically want to follow if you want to find high probability setups. So with that, what I want to do is I want to jump over to options play, and I want to show you guys some real examples so that we can quickly type in some stocks, get a sense for the directional view, and then more importantly, how can we instantly leverage that view into a trading strategy? So here I have that same watch list that I was just showing you before. So I have, as you can see, GE and Facebook are weak stocks, so a score of 1 and 3, and they're red, telling me that they're trending lower. So I can click on GE. As you can see, it's got a score of 1. Technical score very weak. 1 month and 6 month trend is bearish, and it's been bearish since October 24th. So we certainly have missed out on a bit of a move already here. So as you can see, GE, the trends turned bullish or bearish rather on October 24th when it was trading at 12.20. It's down quite a bit here, almost 25%. So I'd say we're a bit late on this particular trade. So maybe let's look at Facebook. Facebook also, same thing, as you can see, it's been quite bearish for quite some time. That trend turned bearish since that last earnings. Terrible earnings they had in July, and it's just continued the trend lower. So you should not only look at both the trend and relative strength, you should also look at how long it's been in that trend for, which gives you an idea as far as what is the potential opportunity here. So this is how you can use our trend and technical indicators to quickly gain a view for the directional trend and also at the same time an opportunity. Conversely, on a stock like NASDAQ, this is a little interesting. As you can see, it just turned bullish just a few days ago when it was at 88. Recently just cracked above a resistance level as well. So that's another bullish factor. So we have a few different bullish factors. As you can see, the stock took quite a beating over the last few months. And as you can see, that trend quality just started to turn around. And I think Charles Schwab and Whirlpool are probably good examples of this, where the stock just started to turn around. As you can see, the 1 month trend turned bullish here on October 30th. So this gives me a clear indication of trend starting to reverse higher, or a strong stock where it got beaten up, but it's starting to go back higher. So this is how we can use our trend indicators to quickly type in any stock and see an opportunity. So Microsoft just turned bullish today. Very interesting stock here. As you can see, it went down with the whole tech sector. It actually didn't go down as much as the rest of the tech sector, which is why it's got a technical score of 9. Very strong stock compared to the overall market, and just had a huge bounce higher. This was the bounce higher on the election news, and that's really how we're able to quickly identify Microsoft as a potential bullish opportunity here out of our list, our short list here. Conversely, if I look at stocks like Whirlpool or Schwab, these are stocks that are exhibiting what Microsoft exhibited a few days ago. So technical score of 3, very weak. So this is clearly a stock that's underperformed the overall market. As you can see, it was at $180 in January of 2018. It's now trading at $117, took a huge hit throughout the year. But as you can see, we kind of recently hit this double bottom. It formed a double bottom and is starting to reverse higher. So this is the type of bullish opportunity that gives you an indication that perhaps the stock has finally bottomed out and is starting to reverse higher. And I can tell you that just by looking at a watch list. I don't even have to pull up the chart. I can get a sense for what's going on. That's how powerful the watch list here at Options Play is. I really utilize it every single day to find potential opportunities. Same thing with Charles Schwab. Technical score of 3, very weak stock. So as you can see, as I scroll out, this stock went from $59 from in May down to in the 40s, and then really just started to bounce back higher. So the 6 month trend is still bearish here. So I'd say this is a little premature on a long trade, but this is certainly telling me that this is a stock that I may want to pay attention to, or a stock that may have bottomed out. And this is really how we can utilize this tool to click on any stock and get a sense for what's going on. Kellogg, as you can see, is not a bad stock. It had a pretty big rally here through May through June from in the 50s to the 70s, 75 or so, but recently really kind of took a tumble. I'm guessing this was probably a move lower on earnings. So this is probably the type of opportunity that you're looking for as a stock that's probably topped out, probably not going to continue much higher, and is starting to reverse lower. Same thing with CarMax. As you can see, this is a stock that's traded sideways pretty much throughout this entire year or second half of the year, but it started to reverse lower. And as you can see, the trend indicator started to turn bearish here just on September 24th when it was still at $75, $76. Now it's down to about 67, 68. And it's been trading within a pretty tight range here. So certainly there may be some opportunities that this stock it could break below the support level and continue much, much lower here. And I think that's an opportunity here on a stock like CarMax. As you can see, there's a major, it's sitting right above that major support level. If it breaks that, I think it can easily go back down to that 57 type target level. So this is really how you can utilize our tools. Same thing with Qualcomm. This is a stock that took a beating on earnings. It's trading now at 58, below that $60 support level. So I do think that this can potentially move lower. I think this is kind of a bit of a topping formation that we saw here from 64 all the way up to about 75 and then back to 64, almost like a head and shoulders type formation. And I think you have opportunities here to the downside. So this is really how you can utilize our watch list. Type in any symbol and instantly get a quick reading of what's currently going on between the trend indicator and the relative strength, without having to know a lot about the stock, without having to do a lot of research. And what we have is watch lists for the individual sectors as well. So I always start off my day looking at the sectors. I want to look at which sectors are strong, which sectors are weak. So it's probably not a huge surprise for everyone that energy is one of the weakest sectors right now on the recent fall of oil prices. So energy, as you can see, has taken a huge move lower. Over the last month. That's why it's one of the weakest sectors right now. Technology also on the weaker side of things out of all the sectors. But as you can see, consumer staples, as the markets were selling off, consumer staples was actually rallying. So this is the type of opportunity that we see by using these types of indicators, as we can see the sector rotation. We can actually see stocks rotate out of tech into sectors like utilities and staples, and even real estate has seen a bit of a bounce from what we had exhibited earlier from technology. So a lot of that flow that moved out of technology, out of industrials, out of basic materials, that flow has now moved itself into sectors like healthcare, real estate, utilities, and consumer staples. As you can see clearly based on these, the weak sectors have bearish trends and neutral trends, versus the strong sectors have stronger scores and they have bullish trends. So this is how we can visually actually see the rotation of these sectors, and that helps you gain an understanding as to where and which sectors you want to pay attention to. And once you're within that sector, you can always look at a watch list of all the stocks within a sector. So if you want to say, okay, I'm going to take a look at energy. Let me look at some energy stocks, maybe some weak stocks that have bearish trends. Look at Halliburton. This stock has really taken a huge beating over the last few years, and recently kind of turned negative here on October 11th. It was trading at $40. Took a huge tumble, started to rally a bit back into that 36 resistance level, but is starting to turn lower again. So perhaps this is an opportunity to potentially get bearish on a stock like Halliburton. Conversely, if let's say I was looking at consumer staples, the strongest sectors, maybe there's some opportunities. I think Walgreens, which is one of the daily plays that we found the other day, opportunity here because this is a stock that's continuing to move higher. Costco, also one of the losers throughout the year, but it's starting to really turn around here. As you can see, this stock has rallied higher above that resistance level, started to pull back a little, and I think there's some opportunity for some growth here in the future. So what I want to do is I want to jump back over to this watch list that I had here before, and I want to show you how you can quickly use these tools to how you can take that directional view and, more importantly, leverage that into an actual trade. So let's pull up Microsoft here. As you can see, this trend just turned bullish yesterday. This is certainly one of the stocks that I'd be looking at if I'm bullish. You know, it's a technology stock, but it's also a bit more on the defensive stock. It's not one of those high-flying technology stocks since it's been around for so long, and it does have a huge amount of revenue coming in. So it's probably a little bit more stable than some of the other technology stocks. So, well, let's take a look at how to take advantage of a bullish move on Microsoft. And that's really where we're going to take a look at the trading tab. For those of you that are brand new, this trading tab is designed to provide you with starting points before you have to pick expiration dates and strike prices, because we know that picking expiration dates and strike prices many times is really just more of a guessing game rather than anything intelligent. So what we want to do is provide some intelligence into your starting points. We will always start with starting points that make sense if you are bullish on an underlying stock, and we always provide you with the 3 most popular strategies. Because if you're bullish on Microsoft, what would you do? You can either buy the stock, you can buy a simple option strategy, buying a call option, or you can buy a debit spread here on the call vertical. And I see a question here saying I prefer credit spreads, and I'll show you in 1 second why credit spreads is not the ideal strategy to use in these particular strategies. So looking at buying a stock, buying a call, and buying a call spread, if Microsoft's at 111 and you think maybe it'll go back to 117, which is where it was 52-week high, I think that's a fairly conservative target. Here, you know, you make almost a 5% return if you had bought the stock. If you bought the call, a 59% return. If you bought the call vertical here, an 82% return. And notice that here, if you bought 100 shares of the stock, that cost you 11 grand versus only $384 to buy a debit spread. And the cool thing about a debit spread and buying a call is that your risk is limited to what you've paid. And that's really one of the critical pieces of being successful in trading, is knowing how to limit your risk, because you can't, at the end of the day, you don't know where the markets are going. You have to make sure that when the markets don't go in the direction that you expect it to, that you have limited risk to the downside. And one of the best ways to do that is by buying options, because you don't have unlimited risk to the downside. So this gives you a clear understanding as to see how your expected returns are impacted based on your views on the underlying stock. But more importantly, what happens if I'm wrong? What happens if Microsoft goes back down to 105, which is where it was just at a few days ago? Very clear, very possible that might happen. But if you bought 100 shares of that stock, you lose $672. Not only do you have to put up a substantial amount of capital, you end up losing more money. Versus buying a call option, you only lose $440, so 2/3 of what you risk if you had bought the stock. But if you bought this call out with a vertical, you only lose $384. So you're risking even less. And that's why this strategy here on the right has the highest options play score. Because not only do you make a higher return if you're correct on the trade, more importantly, you actually risk less money when you're wrong. So the options play score is giving you a sense for the risk to reward of a strategy, so that you can compare different risk to rewards side by side. If you're looking at a call option, it has unlimited max reward. So how do you calculate max reward? That's really what that's designed to do, is give you an idea as far as what the risk reward of each strategy is. And it's color coded for you so that you don't have to remember what's good and what's bad. You just need to know that green is good, yellow is average, and red is poor risk to reward. Everything here on our platform is really color coded to make your life as easy as possible. You just have to remember that green is good or bullish, and red is bad or bearish. And lastly, once you're ready to place that trade, you can hit the trade button. And what we do is we present you with all the details on how to enter this trade into your broker's platform, provide you the bid-ask price. And lastly, what we do is we provide you with what's called a strategy checklist. This is designed to make sure you understand your risks before you place a trade. Are you trading with the trend of the stock? Are you trading with the trend of the market? How's the options play score? Is there earnings between now and expiration? Something that we see a lot of beginners tend to overlook. And lastly, spread and liquidity. We look at how liquid something is before we place that trade. So this is really how you're able to quickly leverage our tools to, number one, find a directional view on an underlying stock. And then lastly, quickly leverage that into some starting points that make sense for you. For those of you that want to modify this, you can click on modify and you can change the expiration dates. You can change the strike prices. You can do all of those things, but we always want to provide you with a starting point that doesn't require you to put in any inputs just to get a starting point. And we always start with the 3 strategies here like this to give you a quick view of how to go about taking a bullish or bearish view on an underlying stock. Let's take a look at a bearish trade here. Let's look at maybe, I don't know, CarMax. Yeah, let's take a look at CarMax. So as you can see, this thing's trading right above that 67 support level. I think that if this thing cracks below that support level, this can easily move down to about 61, 60, even $60. So let's take a look at that. CarMax is trading at 67.98. So what I'm going to press here, I'm going to click on I'm bearish. Now what we're going to see is 3 bearish strategies. So you can short the stock for those of you that are stock traders. Not a strategy that I would recommend, especially when you have the ability to take that bearish view with limited risk by buying a put, only costing you $440, or buying a put spread, which allows you to also take that directional view with even less risk. So let's say I thought the stock was going to go down to $60. As you can see here, I make $500 profit if I had shorted the stock, 127% return if I bought the put, and 170% return if I bought this put spread. So quickly you can see that why buying a put spread or a vertical gives you that really magnified risk to reward when you do get that directional call correct. So if CarMax does go in your favor and it does move lower, you get a substantial amount of profit based on the investment that you've put forth for the debit spread. But most importantly, no matter what, none of our trend indicators are 100% reliable. The market will always change, and we never know the future is going to hold. It's really important that you manage your risk when it doesn't go the way you expect it to. And this is really the reason why I would never recommend shorting the put for someone. As you can see, this stock can easily whip back to $72, $73. In my opinion, or 75, which was the last resistance level. So let's say it goes back up to 74. You lose $900 if you shorted the stock. If you bought a put option, you make $440. If you bought the put spread, you lose only $370. So you decrease the amount of risk as you trade these types of strategies. And that's really the key here of utilizing these strategies for your directional view. And I will just point out why I don't think credit spreads is the right trade for these, because if I traded a credit spread instead, as you can see here, if I traded a credit spread, the credit spread that you trade is always going to have limited rewards. So here, let's say I'm willing to risk, I don't know, $500, let's say $2,000 on this trade. So I can sell 6 credit spreads, buy 4 puts, or buy 5 debit spreads. If I actually think the stock's going to go down to, what did we say, $60? Here, I only make a $1,000 profit by selling a credit spread. If I bought a put, I actually make a $2,200 profit. If I bought the put spread, a $3,100 profit. So 3 times the amount of reward for the same amount of risk that I take by buying a debit spread versus a credit spread. And if I'm wrong, I risk the same amount of money. Here, as you can see on my credit spread, if the stock goes back up to $74 that we're talking about here today, I'm risked $1,900 on the credit spread, $1,700 on the put, and $1,800 on the put spread. That's why we use debit spreads for these directional views, because you're going to get a much better potential reward for the risk that you're going to be taking. And that's why we always prefer debit spreads for a true directional view on an underlying stock. So that's how you're able to take our tools, quickly leverage them and let's just take a look at one last example. Let's look at Whirlpool. Whirlpool is a stock that we found earlier, is a very weak stock. As you can see, it took a very large dive. Recently formed what I would consider kind of a double bottom or W bottom, for those of you that like that term, and is starting to turn around. I think this can easily go back to 126, 130 type level on a bounce higher. So let's take a look at that. Buying 100 shares of Whirlpool is $11,000. Did we look at this example already? No, I don't think so. $11,000 to buy 100 shares of Whirlpool, $550 to buy a one call contract, so about 5% of that, and then buying a put spread, only call spread rather, $492. So this is really where I said I think the stock can easily go to about 130. So as you can see, if I bought the stock, 10% return. Call option, 172% return, which is certainly nothing to laugh at. But if you bought this call spread, 204% return. So this is really where I'm able to maximize my the amount of capital that I'm risking, instead of risking $11,000 to buy 100 shares of stock, I can risk only $500 and really magnify my returns. And that's really how you're going to be able to get a 204% return versus only a 10% return. So the same amount of profit, but only putting up about 5% of the capital as it takes to buy 100 shares of the stock, which really works in your favor if it doesn't go in your direction. So if the stock goes down to $100, I lose $1,800 here if I bought the stock. Not a good place that I want to be in. I lose $550 on the call option, about a third or a quarter of what I'd lose if I bought the shares. And more importantly, only $492 if I bought the vertical. And that's really where we get the highest bang for our buck on the verticals for all types of trading. Now, credit spreads are useful, but they're just useful in other forms of trading. When you have a directional view, debit spreads are far more better for taking that directional view. So with that, that is what I wanted to show you guys here today. I really want to encourage for those of you that want to use our platform to put in the symbols that you want to pay attention to in a watch list, because that's going to help you quickly decipher where you want to pay attention to. Our watch lists are built, they're color coded for you so that you can get a sense for where to pay attention to without having to pull up any charts. And then once you have that directional view, we want to show you how you can instantly leverage that into an option strategy, really helping you compare buying a stock to buying a call or a put, to buying that call or put spread, which gives you added reduced risk. And that's really why we always want to say that you want to look at these debit spreads if you have a true directional view on an underlying stock. So with that, what I'm going to do is I'm going to open this up for Q&A. Please, it looks like I have quite a bit of questions already in here. So I'll answer as many questions as I have time for. If you have any questions, please type them into the chat window and answer as many questions as I have time for. Ron's asking for Amazon. I don't have enough time to get through everything here. I'll try to get to Amazon if I have time. How do you estimate magnitude and timing of a move? Great question. So, there's lots of different ways that you can do that. I like to keep things simple. I always use price action. I always use historical price as my template for what can potentially happen in the future. So, I always look at, what was the example that I was looking at before? A Whirlpool. As you can see, Whirlpool formed the bottom. I always look at where the stock traded previously. So as you can see, this stock hit 123 multiple times here. 725 hit 123, bounced higher. 815 hit 123, bounced higher. Third time on August 31st, hit 123, bounced higher. Finally cracked below it. So 123 is some kind of significant level. Same thing here. So that's really where I use technical analysis to give me an idea as far as where the stock can potentially go to. Price action is usually one of the best ways, in my opinion, to find that magnitude. As far as timing goes, you can look at a chart. You can see how long did it take to go from 123 down to 104. As you can see, that took roughly a month. So it's not crazy to think that it'll take maybe a month, month and a half to get back to those levels. So that's how you can use technical analysis to get a projection for both magnitude and timing. Where do you suggest stop loss orders to be placed? Stop loss orders should be placed above or below support resistance levels. So if I'm going long a stock, I think CarMax is probably a good example here. If I think that CarMax is going to break below that support level, I would place my stops right above that support level, because if it goes back above that support level, then I'm wrong on my analysis that it's going to break that support and go below. But that's because I use support and resistance levels for my entries and exits. So you always want to use the underlying stock to help you determine support and resistance levels that will help you determine where to place your stops. I think Greg's asking, how do you forecast the magnitude of the move? I think I just talked about that. Does the website provide fundamental rating on stocks? No, we do not. I'm not sure that I necessarily believe in fundamental ratings. I'm not sure how you rate a stock fundamentally per se. I've certainly looked at different methodologies, but there's none that works across the board, because different sectors will be ranked differently. Nor do I necessarily know that heavily influences direction. So we've looked at a lot of those ranking indicators. There isn't a clear sense that those ranking indicators give you any good sense of direction. So that's why we haven't incorporated any of them. And just I'm not sure that I necessarily know that they will give you a directional view. I'm looking at my trial screen for options play and it shows yesterday data. So yes, because we haven't populated today's data yet. So once 4 o'clock comes through, we have to wait till our data provider sends us the end of day closing prices. So at 4 o'clock is when today's candle is erased. And then around 5:30, 6 o'clock PM, that's when today's candles reappears once we get all the data from our data provider with the official end of day closing prices. So they will show up there in a few minutes. I know some people swear by technical indicators and some hate them. What's your view? My view is that technical indicators can be very helpful, but I think a lot of the people that hate technical indicators are the ones that are inconsistent with how they apply them. No form of analysis is, I think the one thing to remember, there's no such thing as a crystal ball. So you want to make sure that you apply the same things consistently day in and day out and know why you're applying them consistently, because that's how you're going to be able to get a consistent view on everything. So I have a lot to say on that, but I'm not going to get into that right now in the Q&A section. Can you be profitable on a bearish trend considering the interest rates are rising? I don't know how to answer that question. If could you have made money when CarMax went from $80 down to $70 if you had bought a put? I certainly think so. And I don't know what rising interest rate environment necessarily has to do with whether a stock can go up or down. How often is the DE watch list updated? I'm not sure what, the directional edge is just my own watch list. That's not something that you guys have access to. The watch list here are updated. They're not really updated because the sectors don't really change. We only update them when the sectors change. So the watch lists are completely customizable by you, not by us. We have pre-built watch lists for you so that you can have something in there, but you can create your own watch list. The directional edge is just one that I created for this webinar, just as an example. It's not something that you guys should necessarily use. If the market is going south, do you want to trade those stocks that are bearish? Absolutely. That's exactly the type of trade that you'd want. Is bearish stocks in a bearish market are the ones that are most likely going to move lower, especially stocks that are weak. Can you import a text file for symbols for the watch list? Currently, we can't do that, unfortunately. So we can't do that currently at the moment. I prefer credit spreads, not debit spreads. Everyone has their own preferences, but I think what you shouldn't trade is based on your preferences. You should trade on what makes you the most money with the least amount of risk. How do you tell that? You put the two side by side, you put in your outlook, and you see what makes you more money. So if I wanted to do a short call vertical here on CarMax, I'm not saying one's better than the other. Just put the two side by side and say, if CarMax went down to $60, where do I make the most amount of money? Would I rather make $90 profit or I make $630 profit? I'm going to take the one here. If you think CarMax is going to stay where it is, then sure, I would trade the credit spread. But that's not a bearish view on CarMax. That's where I think the stock's not going to go anywhere. So don't trade a strategy because you prefer it. Trade a strategy because it makes you the most amount of money for the view that you have on the long stock. I hope that makes sense for people, because I hear a lot of people tell me, hey, I prefer trading this or I prefer trading that. I don't care what you prefer. Trade the ones that make you the most money. And the only way you can tell that is use options play, put the three strategies side by side, and see what the different outcomes are for the different strategies that you're deploying. Credit spreads are very useful, but they're only useful in certain market conditions, which is primarily when the markets are moving or not moving very much. So make sure that you're applying the right strategies for your outlook, not just because you prefer it. Seasonality, is it because we're going into holidays? Do we want to trade those stocks that are bullishly correlated to holidays? That's a very hard question to answer because I'm not sure what you're measuring seasonality on and how you decide whether a stock was correlated to the holidays. So there's a lot of moving factors there. If you want to send me an email separately on that, I'm happy to kind of answer that question. What does the circle next to this 102 mean? The circle here, the circle is just color coded, letting you know that it's color coded to let you know what's good and what's bad. What influences the pop? No, there's not much that influences the pop. The pop is all calculated based on the implied volatility of the option. That's what the pop is calculated from. When you modify the expiration date and strike price, is the loss accurate when using the P&L simulator? Yep, absolutely. It's all accounted for. Is your StockTwit signal all credit spreads? Yes, the StockTwit signals that we recently launched a couple of weeks ago is only credit spreads because that was a strategy that we designed specifically for credit spreads. So we designed a technical strategy that was able to find stocks that had a high probability chance of moving in one direction or another. The moves weren't very big, but because it was high probability, they were best suited for trading credit spreads. If you're interested in that, please view the webinar recordings that we have on that specific strategy. That will give you a better insight into trading credit spreads specifically and why we launched a signal service specifically for trading credit spreads. I'm very, very excited about your release of StockTwit signals. You mentioned in your last webinar, the performance figures will be out soon. So we just closed, I think, 5 or 6 trades on that. So we're just in the process of starting to calculate live signal performance. The only reason we haven't published any performance numbers is because we simply don't have enough closed trades yet. We just closed out about 6 trades as of today, so we're starting to get there. Hopefully that'll be out by, I would say, next week. We'll have enough trades to start having at least, I don't think it makes sense to publish performance with less than 10 trades that are closed. So we're about to get there very soon. Are you willing to review 2 recent trade recommendations, one in each direction? What you saw each time? Sure. Let me see. Let me just look at a few other questions before I jump back to that. Is your pop based on normal distribution? It's not based on a normal distribution. It's based on a log normal distribution because stocks exhibit log normal distribution, not normal distribution. Where can we see videos of how to use options play effectively? Great question. So that's going to be in the links that we send out. So in the email that we send out, we will have a link to webinar recordings. That's how you're going to be able to see all of the education that we provide. Can you add your own shares? I'm not sure what that means. What do you mean by add your own shares? If you can clarify on that, I'm happy to answer that question. The suggestion that the system gives you is the best scenario out of all the expiration and strike prices? No. So this is by no means what I would consider, and I don't know there's any such thing as a best scenario. This is simply just a starting point. These 3 strategies provided to you are starting points because it's a good starting point to either short the stock, buy a put, or buy a put spread. And we've always looked at an expiration that's about 45 days out. And we've optimized these spreads based on what we have historically seen give you the best risk reward ratios, buying a slightly in the money call or a put, and then selling an out of the money about a 15 delta call or put against that. So these are all optimized for you as a starting point, but depending on what your outlook is, that's how you're going to be able to find the best trade. But we don't know what your outlooks are. So we can only start you off with what we think are generally good starting points. When would you close a debit spread? Great question. So we usually close them out at about 50% loss if you've lost money on a debit spread, or about 75 to 100% gain on the upside. So I still have a lot of questions, but I do think that Chris's question about looking at the rationale that we had on some of these trades. So we put a bullish trade on Cigna, and he asked me why we went bullish on Cigna. And Cigna was actually pretty clear at the time, where the 6-month trend was bullish, but the 1-month trend started to pull back. These pullbacks provide us with good entry signals. And that's really what I saw here on Cigna that day, was that 6-month trend so the overall trend was still bullish, but the 1 month trend was pulling back, which is telling me that this provided a short-term, a good risk to reward to enter a long trade. And at the time, healthcare was a pretty strong sector at the time. Let me pull up the sectors here. At the time, healthcare or actually, I don't remember when we entered this trade. If you remember what day it was, but this is certainly one of the stronger sectors. And when I felt that this was quite oversold and it was likely going to bounce higher, that was the rationale for getting into Cigna. Chipotle Mexican Group was, similar type thing, just the exact opposite. I felt that this was the trend overall. 6 month trend was bearish. It had a recent pop higher, which felt like that the stock was potentially going to reverse lower, but obviously that didn't happen. The stock kind of still continued going higher, but it's still below that resistance level that we were looking at, about 475. So, we may pull the plug on this trade in a few days. Basically, we just thought that this had a really good risk-reward ratio of a move lower. That obviously didn't quite happen the way we expected to. So that's why those are the rationales behind getting long Cigna and short Chipotle. What do you think about using volatility stops like 3 times ATR? Hey, I don't think there's anything wrong with that strategy as long as you stick to that strategy every single time. If you're going to use ATR this time and then moving averages the next time and then support and resistance levels the day after, that's when you're going to get inconsistent results. If you like to use 3 times ATR, use 3 times ATR every single time you trade. That's how you're going to gain consistency in your trading. Can you talk a little bit about the trade score and what goes into the calculation? I'm not sure which trade score you're talking about. If you're talking about the options play score, I've already discussed that in a little bit ago. It's the risk reward of each strategy weighted by the probability. Are the sector ETFs built into the program or do I have to create? No, the sector ETFs are created for you. So all the sector ETFs are, every single one that has a little globe next to it, these are our global watch list. So everyone has access to them. What is the delta used for vertical debit spread? So we always use roughly about a 55 delta on the long leg and about a 15 delta on the short leg. I missed Tony's answer on updates of the watch list. I'm not sure what the question was. If you could remind me of what the question was, I'm happy to answer that. A lot of questions today, which I'm not complaining about. Does the daily trade window show best strategies automatically? Can you put default strategies in settings? I have no interest in stocks, so having some up by default is annoying. We're looking into customizing these strategies. The problem with customizing the strategies is how do you pick which expiration dates and strike prices? So we're not ready to just let you customize your own strategy because that also opens up a whole nother can of worms. We are looking into it. So, if you have a specific strategy in mind, we certainly are looking to add credit spreads to that as one of the default strategies. So, because we know that a lot of you do trade that, but that's part of why we launched our credit spread trading signals. Because credit spreads are very unique type of strategy. They're really not useful in many, many different directional views. They're only useful in a very small, narrow use case. And we find that, that it's important that you know what those use cases are, which is why we just created a signal service for that. In your watch list, can you add your shares? No, you can only add a symbol in the watch list. How many trades should I aim to have simultaneously in a portfolio of 25,000? So I couldn't tell you how many trades you should have simultaneously because that depends on how much time you have to keep track of all the trades. But general rule of thumb is you don't want to risk more than 2 to 3% of a portfolio in a single trade. So you kind of do your math there as far as how many trades you can simultaneously have, but I wouldn't recommend you to have 100 positions on at the same time per se. It's because I think it would just be impossible for you to keep track of. Tom, thank you very much. I really appreciate it. Raymond, also thank you. I really appreciate that. Where can I find your options play signals on StockTwits? So that'll be on stocktwits.com. webinar.com/r/options play signals. For those of you that I will put it into the chat room, for those of you that want the link to this subscription. So if you want to subscribe to our new signal trading service for credit spreads, I just put this link to that in the chat window. Would you consider being able to communicate with other traders on the platform? So we've actually created a whole room for you guys to, if you guys want to chat with everyone else, we've created an options play room on StockTwits. So if you just want to talk to other StockTwits traders, we created this room to allow you guys to chat with each other and share ideas. There's 230 of you already in that room. And then if you want to subscribe to our signal service, you can subscribe to options play signals. How often is the directional edge watch list updated? So I think I already answered that question. So that watch list is not updated at all. It's just one that I created just for the purpose of this webinar. It's a personal watch list. So it's not something that's not a global watch list. Only these ones with the globe next to it are global watch lists, and we update them when the sectors change. Trevor, thank you. I really appreciate that. Any other questions? A lot of questions here today. I really welcome all of your questions. I love answering your questions. You know, this is really what we do these webinars here for. Where are your prior webinars? So here, I'll send you a link for those of you that want to take a look at all of our previously recorded webinars. So I just sent the link into the chat window for those of you that want to view our prior webinars, but they will be also included in the slides that we send you with your recording. Any last questions? Chris, love your platform, but struggling to make it profitable, but appreciate you sharing your knowledge. Chris, it certainly has been a challenging couple of months for trading. You know, the volatility hasn't been very helpful because the volatility has been in both directions. Certainly, I don't think you are on your own in terms of struggling to make a profit. Even we have struggled in the daily plays over the last couple of months. It's very difficult to trade this type of market environment, but it's really important in order to stick to your trading strategy to understand when your strategies are generally best, what environments are best for your strategy, which environments aren't, so that when you look back and say, hey, I haven't done very well over the last couple of months, but it has been a very challenging environment, that's when you're going to be able to stick around with your strategy and not jump ship and try other strategies, because when you jump ship all the time, that's when you get inconsistent results. Understanding when your strategy should be profitable and when it shouldn't be profitable helps you stick to your original plan. So hang in there. It certainly has been a challenging couple of months, I think, for a lot of traders. Is StockTwits only for credit spreads? The StockTwits signals is only credit spreads. Because that was a strategy that we back tested that was optimal for credit spreads, and that's why we launched that. You know, we are in the process of back testing some strategies for debit spreads as well, and we're potentially going to launch a new service for that as well, but that's still in the works, and I'm not ready to announce that just yet. Would adding a market timing signal to the platform help in these times? So I'm not sure which market timing signals you're referring to. If you have one in mind, we can certainly look at it, but I don't know of any truly market timing signals per se. Because we can only say that this is not a good environment for our strategy going in hindsight. You know, we certainly weren't, you can't predict that when you were trading them. You can only look at historically, now that you've lost some money on trades, and, you know, looking back to say, was this the environment that is best for my strategy? I absolutely will send everyone an email when the debit spread signal service launches. But like I said, we're still working on it. I don't have by any means a date, or I don't even know if it'll work at the end of the day. We're still in the process of working that out. Any last questions? Where do you click to communicate with other traders? If you join the options play rooms, you can just type. It's a chat room effectively, and you can see the history of all the trades. So you can go in there and you can type. I don't know if you're a subscriber to our Signal service or if you're just looking to talk to other options play users, but either one you can chat. The credit spread signals is, I think, a little bit more active because a lot of people talk about where they get filled on those trades, things like that. How many credit spread opportunities on average per day? I think we've been averaging about 1 to 2 a day. You know, we have had a few days where we had 3 or 4 signals, but they average about 1 to 2 a day, which I think is more than enough for most people. So any other questions? Can you go over today's Amazon vertical? So this is a bit off topic here. This is regarding the credit spread. Today we shorted a credit spread on Amazon. It was the 1765, 1660, November 30th. So as you can see, Amazon recently bottomed out, started to turn a little higher. This was the opportunity that we saw. So what we did is we looked at shorting the 1760, no, what was it? 1765, right? 1765, 1660. So this was the vertical spread that we looked at selling on Amazon. Basically, it will profit as long as Amazon stays within this slightly above 1765 area, which is where we feel that Amazon is going to be in the next couple of weeks. We've already taken profit on a lot of these credit spreads, so it's been working out pretty well, but that's because we've been in a bull market. These are all bull put spreads that we've been trading. So things have been going pretty well for the first couple of weeks. So I hope those of you that are interested in selling credit spreads join us and are able to take some of these trades with us. It's been a pretty exciting few weeks. You know, we've all been chatting in here as far as where we get filled. Very interesting to see the different fills that people get depending on what broker they're working with. But it's been a pretty exciting time to be in that chat room. So I hope to see a lot of you there. Any last questions? This is probably one of the longer webinars that we've done. If there's no more questions, I want to thank everyone for taking the time out this afternoon. We really are appreciative of the time that you guys take to spend the hour and a half, hour, 15 minutes with us, learning about options play, learning about these strategies. You know, we do these webinars for you, so I really appreciate all the questions. And I hope everyone has a great afternoon, and I'll send the email out to everyone in about half an hour with the recording. So have a good one, and I'll see you guys next week.